Today we're going to talk about a situation that I actually encountered recently. I actually had one of our network followers call me, and we're just going to call her Sarah. She called me and she said, "Hey David, I was turned down by another lending institution and they said it was a manual underwrite and I don't quite understand why, and I want to know how to fix it." Hello, this is David Xie with the Xie Mortgage Team. So let's first talk about a manual underwrite and what a non-manual underwrite is. So as a lender, when we take a loan application, we always put all the information in, all of your income, your assets, and your liabilities, and we run it through this automated underwriting system called DU or LP, okay? Desktop underwriting or loan prospector. And the way that we do that is it goes through this automated underwriting system and it tells us, okay, well, this loan is approved eligible or accept. That means the loan can be done automatically as long as we can verify the income, assets, and liabilities. However, if we get the findings where it says refer eligible, that means that the loan is not eligible for an automated underwrite, and it may require a manual underwrite, which means that the underwriter has to actually go through all the income, assets, and liabilities, and we need to make sure that we meet all the guidelines. So, what causes a manual underwrite? Number one, if you have $1,000 or more in disputed accounts. Having too many disputed accounts is an issue, and I know there's a lot of myths out there that, hey, if you dispute it, it can come off. I would say, the chances of it coming off without any proof is pretty slim. Second thing, if your case number assignment was actually ordered prior to the minimum waiting periods of your bankruptcy or foreclosure, as a bankruptcy, it's 2 years, okay? From the bankruptcy discharge to the new order of the case number. You gotta wait the 2 years before the case number is ordered. If it's ordered before, then it's a manual underwrite. Same thing with foreclosures and short sales. Those are actually 3 years. The other thing is if you've had too many lates. If you had 3 or more 30-day lates in the last 12 months, then that's an automatic downgrade. If you've had one 60-day along with one 30-day, one or more 60-day along with one 30-day, then that's also a manual downgrade. And you know what? If you've had a 90-day, then that's an automatic downgrade. So you definitely never want to have any of those. Now, the other challenge is if you're self-employed, and I know you've heard this so many times from yours truly. However, if you've had a 20% or greater decline as a self-employed borrower, then that's also a downgrade. And finally, one of the biggest ones is, undisclosed debt. So I always tell my lovely customers that, when we're working together, we're married, okay? And because we're married, you really need to just tell me everything, right? I'm not here to judge. I've got some things too, and I'll probably tell you about some of those. However, if it comes down to your financing, it's really important that you tell us about it. If there's any undisclosed debt that pops up that may have some delinquencies on it, or maybe it's just a collection bill that you were like, I'll never see that again, and all of a sudden it pops up, then that could surely be a problem. So, the solution. What can we use to overcome the challenge, and how can we get some compensating factors? Compensating factors are cool things like, hey, I've got a couple months of cash reserves. I've got 12 months of canceled checks on my housing expense, which I can certainly show you and have proof that I've paid it. We also use non-traditional credits such as telephone bills, utility bills, insurance bills. And then if you have other bills, if you don't have those bills that we can track, then we can use things such as childcare, rent-to-own stores, any retail stores, medical bills that are not covered by insurance. But the key is that we document 12 months. You can also use 12 months of savings history, because underwriters love to see borrowers like yourself looking to purchase a home save more, because those are called cash reserves, okay? Just in case you have a problem financially, that you would have X amount of months of cash reserves to take care of things. And finally, the last compensating factor that we can kind of use, and this is really digging deep in the well now, is if you're an authorized user on an account, which is like a credit card account or something, however, you can prove that as an authorized user that you've been making the payments, then that would work as well. So this is David Xie with the Xie Mortgage Team. I hope this video has been informational and informative, because that's what we strive to do here as a group. And please be sure to like the video, subscribe, and hit the notification bell, because you want to see all these awesome videos that we do here. And be sure to call me at 757-478-8493 And hopefully they're gonna put my calendar link down below. So if you wanna schedule a time to talk to me, yours truly, you can. All right, I'll talk to you later. Bye.